Good evening. This is the Elliott Wave update for the NASDAQ 100 for Wednesday, December 15th, 2021. What a glorious day for the Elliott Wave count that I have put in place. As I left off last night on our update, I had suggested that this was only the completion point for minute wave one of minor 5. Then we had 3 waves down, and that was minute wave 2 of minor 5. And then I had been looking that this was a very powerful rally off of that low, and that I thought, okay, could be wave 1 of 3, and then come down and wave 2 of 3. And I had left it that the no break line, or the break line, was 15,734. So we were basically higher on the day. And then, of course, the Fed meeting came to conclusion, the announcement was made, and that first nosedive took us down to 15,740. It held, the market turned, the market rallied as it began its third wave. So wave 3 of 3, firmly in force right now. And I know I keep discussing what the characteristics are of a third wave, but we're witnessing it. We get that initial boost, we get the pullback, and then the 3 of 3 wave. It just goes with power. There's no stopping it. In fact, I want to open this up so you can see the size of these hourly bars. That was the first bar. Then it changed, and that second bar was incredible. And it was amazing to trade because you basically just had to get long and sit. And the NASDAQ advances at $20 per point per contract. So a one lot, one contract was easily during these moves, pulling in between 500 and 700 and up to $1,000. And so it was a glorious move, but it was exactly characteristic of what we look for. So what can we now expect going forward? I will say that my first target, where wave 3 would only be equal to wave 1, comes in at 16,633. That may just complete the 3 of 3. And then I discussed that I believe that the completion point for this third wave would come in at the 1.618 level, which is 17,190. Now, that's pretty high, but that is the Fibonacci relationship, and that's what it's showing. Can it stop in between there? Of course it can. But I am now looking that this third wave, it's got enough strength today, and if that power holds through Globex and into tomorrow's session, I would anticipate that we start going for new highs. Today's turnaround, the market was down 150, and at one point it was down over 200 this morning. And in fact, when it dropped down to 15,740, that was down over 200 points. And it reversed and is finishing up 366, with the cash market finishing up 375 points. It was an amazing turnaround. It was an amazing rally. And when I talked about it yesterday, I was saying that what I am discussing is not fundamental. It is not based on any news. It is a purely technical view of the market. So technically, this is what I was looking for. But what triggered it? Their response to the Fed. the response to the news that we're going to taper 3 times in 2022, not just a couple, 3. So market loved it. Now, why would the market love that? Let's just think about that for a moment. First of all, the threat of high interest rates is off the table right now. The recognition that the Fed is a little bit behind in terms of dealing with inflation by terming it as a real threat now been put out there. So some trust possibly being put back into the Fed that they do recognize that inflation is harmful and it is really hurting a lot of people and that they need to get a hold of it. And so I think that's now been factored in. Plus, just now understanding that, yes, tapering's for real, we're starting, we're doing it. And so the bullishness is that, okay, that's going to take care of a lot of problems that are now plaguing the market, the biggest one being inflation. If they can get a grip on inflation and rein it in before it gets totally out of control, that's a large positive. And I think that combined is what pushed the market higher. Now, going forward, I still believe we need to be prepared for pullbacks. And right now, I don't think, let me even take this down. Let me take it down to a 30-minute chart so I can see some of the internals here as to what happened. There just really aren't any. It's just straight up, 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 up. So there's nowhere where I can say if we got 1 and 2 that, 1 of 3, 2 of 3, 3 of 3, possibly that's what's finishing here is the 3 of 3 move. And if that's the case, then we could get a 4th wave and we would run those Fibonacci retracements from this low at 740, 15,740 up to this high at 297. I think we got up a little higher with this, 16,300. So that's how we would look for where our 4th wave should come in. Again, if this pressure remains this high for the market to just continue moving higher, if the buy pressure remains, the 4th waves are going to come in really shallow. So you can start really thinking that I'm going to be looking at from 6250. Maybe it gets back down to the 4, which is at 16,200. But again, we must take it every step along the way. So that's the 30-minute to 4 moving average. So the market has turned itself back around and it's now presenting a very positive picture for us. So pullbacks notwithstanding, I would expect the market to continue to move higher, hopefully getting back closer to that 16,400 level. And because don't forget our high that needs to be broken here is at 16,767. That's where I needed to come above eventually. Still, basically, come on, let me what this number is. I don't know, the new charts drive me crazy, huh? 16,767. So 768 new high. And I think that this 3rd wave should take us pretty close to those levels. If wave 1 blasted like this, wave 3 has to be 1.5 times that at least. That's why we have 1.618, because it should exceed the power that we saw coming off of that low at 15,538. I'm looking for that type of a rally, and then some. So if this was 436 and this is 538, we're talking 900 plus points. So let's call it 900 points. And if I'm looking for 900 points from here, that's here. And I'm thinking that we got to go further. So possibly the 3 of 3 finishes here or finishes above, well above where we are. And I think we definitely have to move above 16,437. And I believe that if we had more time today, if that bell didn't have to ring, they would have just kept this move on going. So I am looking for higher levels. I think pullbacks will be mild. We continue to be news driven. So whatever might come out tomorrow could have a swing. We're also now moving into the final stages for Friday's expiration. And if you saw really what they came back for today, Apple, Advanced Micro, AMAT, Amazon, Google, Facebook, Microsoft, NVIDIA, Tesla a little bit. But those others, they're coming back strongly. They got Apple, that was down at 172. It's now back at 179, above 179, heading towards back at 180. So those pushes, those gamma squeezes are back on. And let's see what happens. So I think for tomorrow, we continue to move higher. Our resistance is right where we are, and it reached it and exceeded it by a little bit, 16,290. Then we have 16,368, then 16,441. Then we get a nice break above that, and that should get us closer to 16,633. We do a fourth wave pullback, do a fifth wave rally to complete the third, do another fourth wave pullback, do a larger fifth wave rally to complete the minor five. And hopefully by then we are solidly in new high territory. Again, remember our upside target, 17,189. That's for wave three, but I'm thinking we might get up there in terms of the entire minor wave five. So let me add one more. I'm going to add that fifth wave calculation on here. And I'm actually going to go back out to the fourth full. There you go. Let me just put this together. Hold on 1 second. Pull this back out to the 4. Because we're gonna put our other measurement back. I'm going to take it from here. We're just going to give an estimate because I got to get in and I'm going to put this down like this low. 34. Yeah, good enough. All right, so let's see where, if anywhere, we start to overlap, and I see some already. Go back down to our hourly chart. So we have a little bit of overlap. The 50% overlaps where the 100% is for the third wave to the wave one, and actually on the minor fifth wave, it's where the market, where this whole move would equal 50% of that third wave. That's a good place for this third wave to finish, do a little bit of a pullback. Now, we have additional overlap up here at the 618 level for minor five, and that works very well because we also have additional lines here at 16,845 to 16,885. That could be possible. Then we have, well, not really any additional until we get up above 17,000. Then we have the 618 at 17,190, and then we got 17,200, and we got a couple of overlaps there. So the zones are in. Let's let the market do its thing and see what we can get done here. And again, I think possibly by year end. Downside, again, should be limited. If anything comes in more severe, I think it's going to be news driven. So always be on the lookout. But what you will get announcements because it's going to start breaking support. It's going to start breaking moving averages. Again, on our hourly chart, let's take a look. Let's open that up and take a look. You can see that we just are turning these things higher. We got the 20 now zipping up. We got the 50 turning higher, and the 200 just beginning to crest and angle back up. These all of these, the 50 needs to get above the 200, the 20, the 4, and the 8. The 4 is dang close right now. That'll start to improve our picture. When the moving averages start to get above that 200, it's going to set the stage for a very, very powerful finish to the whole scenario. Coming back down, I don't want to see anything break below the 200 right now. A pullback coming back on the hourly and breaking the hourly 200, negative. It's a negative. I really don't want to see that. Stranger things have taken place, like today, coming all the way, gotten really dang close to breaking it. But this is what I told you, though, a second wave, which is what this was. This was a second wave to this first. This was a second wave to this wave one. And it got close, but it didn't break. And that holds within the rules, holds within the guidelines, and sets the stage for the rally we just saw. Okay, so I'm going to leave it all there. Trade smart. Use these moving averages as long as we got them all in alignment. And when you get down to your smaller time frame charts, you're going to see that you have a lot more play, because your moving averages are going to go right dang close. This is a 1 minute, 2 minute, and this normally is the 5, but I was using it as my hourly so I could see the larger picture for that 5 minute. It just was impressive. So you can see on the 5 minute, on the 2 minute, and on the 1 minute, we are in alignment to just continue higher. 5 minute, there's the 200, there's the 50, there's the 20, and look at this angle of how they're moving. This is all giving you support that this continues. The angle is totally up. Only out here on this 1 minute, and that's because the market closed, we're now just starting to flatten out, because that's what's happening now. They're just all waiting for glowbacks, and they're waiting for the next, the next round. So that fits very cleanly, but here they are still angling strongly higher. I'm going to change the color of my 20 because sometimes it's very difficult to see it because it's too dark. In any case, I'm going to leave it there. Have a great trading day tomorrow. Use the moving averages, use the Elliott, use the Fibonacci. Next update will be Thursday, the 16th.